What's up everyone, it's Caddy with MoneyVest. Let's talk about Nvidia. Nvidia is going absolutely crazy again, no surprises. Trading as much as $500 per share, up another 6% after hours, taking up AMD, Google, Supermicro Computers, SMCI was up over 9% after hours as well. So we're going to discuss everything in this video, from their earnings, from their revenues, the growth rates, the balance sheets, the cash flows, the buybacks, and the price action, and the intrinsic value calculation as well, which is going to, you know what, I'll see if I can even do that, because there's a wide range of discrepancies. In other words, there's going to be a wide range of outcomes for Nvidia's now. Okay, because of their market cap and of course because of their total addressable market, their TAM growing to such extreme levels, we don't really know exactly what that growth rate is going to look like over the next 5 years. It could be 800%, it could be 8%, right? It's a wide range of possibilities. But nonetheless, hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the alerts, all the investing benefits, of course, in educational material, intrinsic value spreadsheets, of course, trading view charts. There is a 16% annual discount available till the end of this month, so link's going to be down below if you're interested in joining our MoneyVest community. So this right here were the numbers, and man, oh man, I am absolutely blown away. Revenue up 101% in the second quarter of fiscal year 24 versus second quarter fiscal year 23, like just more than doubled in terms of revenue. Gross margins were up over 70%, sequentially up 6 percentage points, year over year up 26%. Operating expenses were very, very minimal. Like, this is crazy. 10% increase in operating expenses, and revenue was up 101%. That just goes to show how efficient Nvidia is. Operating income up over 1,263%, with net income up over 800%. Like, what is going on? Now, I will point out though, I just want to point out, while we go crazy over these numbers and these growth rates, Nvidia is also comping over some very, very tough, very easy, Nvidia is comping over some very easy numbers from last year. I'll go over the graph here at the moment, and that's exactly why Jensen Huang mentioned that this quarter our growth in revenue could be up over 170%. And the reason for that is because same time last year, revenue growth was really low. So revenue was obviously a lot lower. So they're comping over some very easy numbers, right? Their comparables from last year are really easy to beat. That's exactly why the growth rates are what they are. 845% growth in net income. It's insane. Operating income up 1,263%, but that still doesn't take away from the fact that they were able to more than double their revenue while keeping their expenses very much intact, only up 10%. That's a sign of a very well-run, efficient business. And Nvidia is that, right? It's a high-quality company. Of course, there's never been any issues with the quality of the company itself, right? The fundamentals, the quality, the business itself, the total addressable market, the potential, the management, all that has been A+. The only question have always been around valuation and of course the prices that it's trading at. This right here were the actual numbers. So earnings came in at $270 per share versus $209 per share. Revenue came in at $13.5 billion versus $11.22 billion. So literally Nvidia crushing expectations, and it said expects third quarter revenue of about $16 billion. That's higher. $12.6 billion was the analyst expectations, and said that the revenue would be growing 170% year over year. But again, I want to point out that year over year number is, again, comping over some very easy numbers. So this right here is what they are comping over, right? Very easy numbers, 101%. So this right here, the bar graph that you see, is literally comping over this minute number, right? And then of course, over the next 3 quarters, they are going to be looking at sales declines from last year versus, again, very strong growth, 170%, 100%, because AI has literally boomed their business. And of course, not to mention that they are comping over some easy numbers here. Now, Nvidia's strong sales of forecasts underscore how central the company's graphics processing units, so GPUs, have become to generative AI boom. Nvidia's A100, H100 AI chips are needed to build and run AI applications like OpenAI's ChatGPT and other services that take simple text queries and respond with conversational answers or images. And revenue in the second quarter doubled from 6.7 billion a year earlier, increased 88% from that period. And the world has something along the lines of about $1 trillion worth of data centers installed in the cloud, enterprise, and otherwise, is what Jensen Huang said. And the $1 trillion of data centers is in the process of transitioning into accelerated computing and generative AI as well. And on the earnings call, finance chief Colette Kress said that the company would not be immediately affected by the proposed Biden administration export restrictions on chips. So we know that the Biden administration has been putting export bans on specific chips to China on their battle of AI and technology. And of course, given the strength of demand for our products worldwide, we do not anticipate the additional export restrictions on our data center GPUs. If adopted, we would immediately have, or we would have an immediate immaterial impact to our financial results as well. So again, this right here are the year-over-year comparables. Balance sheet, the cash level just exploded from 13.3 billion to over 16 billion dollars, and their total assets, total current assets, sitting at just under 29 billion, with their actual total assets exploding to almost 50 billion dollars for the company, and long-term debt sitting at 8.4 billion dollars. So they got a lot more cash than debt on the balance sheet. In fact, they've got more cash, almost more cash. In fact, their total current assets are more than their total liabilities, which again is a fantastic balance sheet to begin with. Now, when it comes to share buybacks, now this is something that I don't think was wise for the company to announce. Yes, they have been consistently buying back shares, but if you take a look during the second quarter, fiscal year 2024, Nvidia returned $3.38 billion to shareholders in the form of 7.5 million share repurchases for $3.28 billion and cash dividends. And at the end of the second quarter, the company had about just under $4 billion in remaining under its share repurchase authorization. And of course, August 21st, 2023, the board of directors approved an additional $25 billion in share repurchases without expiration. And Nvidia plans to continue to do share repurchases this fiscal year. Now, I don't personally think that is the right use of that cash, and the reason why. And I'm sure if I pause this video, you guys will be able to answer this question as well. The most effective share repurchases come in when the company's price itself, the stock price, is trading, at least what the company perceives to be, at an undervalued level. Doing $25 billion at a price where Nvidia is at $500, right? $1.2 trillion market cap. It's crazy, right? I mean, you can make your dollars go a longer way if you are buying them at, of course, a huge discount. But Nvidia by no means is at a discount. I think we can all agree that regardless of how great the company fundamentals are, great the quality of the company is, and of course, lots of opportunity to unlock, the valuation is, it's nowhere near close to a discount, right? It wouldn't be considered as an undervalued stock, right? Or a discounted stock by any means, because like I said, it's trading at a 30, 40 times sales multiple, 60 to 70 times earnings multiple. So these are just, of course, crazy numbers. So by no means, I think it is an undervalued stock. So that $25 billion is really just buying an overvalued stock, right? So that's why, and the whole idea behind share buybacks and share repurchases is to generate what? High return on capital, right? Capital being the actual money, and you want to generate a return on that capital. If any company buys back their own shares at an overvalued level, their return on capital is a lot lower versus if they invested that money, let's say, in another project, right, that yielded a higher return on capital that helps them expand their business, grow their presence, improve their revenue, whatnot. The cash itself is a very, very important, capital-wise, it's a very important tool, an instrument that can help you generate return, right? If you don't invest, you don't generate a return. So with any company, share buybacks are such a important topic of discussion, because if they want to do it, they better make sure that they're doing it with keeping in mind that they are going to be able to generate a higher return on capital from their own stock price versus investing it in other opportunities. In Meta's example, had they basically used a lot of that cash to buy back their own shares when the stock price was literally collapsing, instead of investing that in the metaverse, would have been a lot better, right? Because then it would have been a high yielding, high return on capital play where they're able to buy shares, at $80, $90 per share, right? When their stock is actually cheap versus investing in the metaverse where their return capital was really low. So hope that makes sense. And that's exactly kind of like my take on why, if I were on that board of directors, I would have not approved like $25 billion because the price is too high for Nvidia. Like, why would I want to buy at $500 Nvidia stock? Like, you're not going to get that much value out of that anyway. And sure, over the long term, it still could be argued that it is undervalued. Like, if you stretch the timeline out 5 years or 10 years, I'm sure there's going to be a lot of Nvidia bulls kind of saying that, even the pricing is perfect, even the valuation is perfect at $500. But come on, folks, let's wake up. We've seen this before, right? This is not something new. Tesla's gone through these parabolic runs. We've seen Apple gone through these parabolic runs. We've seen plenty of stocks out there. Bitcoin's gone through these parabolic runs. Most companies do in their cycle, in their price action wise. They go through these cycles where they've seen these parabolic runs where nothing seems to matter, right? It's attractive at any price. The moment investors start to feel that any stock is attractive, regardless of the price, is when the dangerous part actually begins. The fact that there is no risk is the biggest risk of them all. So keep that in mind. And now going over to this, I don't even know where to start because, let's say 2023 EPS ends up at $10. Earlier it was at $8. We're upping our estimate to $10. I'm sure you're going to see a lot of analysts go ahead and upgrade their price targets, their EPS expectations. A lot of the models are going to get updated tomorrow and Friday. But let's just say that we're going with $10. And a growth rate for Nvidia. And one of the things, again, I want to point out is that they're comping over some very easy numbers from last year. That's why the growth rate is at over 800%. But think about what they're going to be comping over next year when they are doing against these numbers, right? It's always a forward-looking estimate because, yes, right now, if I go with 20% growth rate, people are going to be in the comments, Caddy, they just grew earnings by over 800%. Right? 800% versus 20% is nothing. It's even compared to 30%, it's crazy. Like, why would you go with such a low number? Because we're not trying to predict earnings for this year. We're trying to understand what the earnings growth is going to look like 3 years, 5 years, 10 years from now. And just think about it, right? Next year in 2025, fiscal year 25, calendar year 24, they're going to be comping over these numbers. A year from now, we're going to be having this conversation where they're going to be comping over the numbers from today. And if a year from now, they're still able to grow 800% earnings, I will admit I'm wrong. Okay? I will admit in that video that, hey, Nvidia is in its own league. It can actually grow earnings by 800%. But let's face it, guys, it's not sustainable, right? No company can actually grow earnings by 800% every single year. That's just not possible. So we have to go with a number that's more reasonable, more realistic in terms of that growth. So if we go with 25, closer to 30%, even 30%, like I'm willing to go with for Nvidia's earnings, multiple wise, and again, this is where things get a little debatable. It's, some people are going to give it a 60 times multiple. Some people are going to give it a 20 times multiple. Some people 10, maybe 100. It's just going to be all over the place. I like to keep the PEG ratio as intact as one as possible, like as close to one as possible. So I'm going to go with 30 times P multiple, 12% discount rate, obviously, 10% margin of safety. Now share dilution, we're going to keep that at, wow, it's at $568. That's crazy. It's already at $568. That's crazy. That's all because their net income is expected at $25 billion. It's $25 billion is actually more in net income than the revenue from last year. Yeah, you heard that right. Revenue last year, $26.97 billion. Okay, so it's slightly lower. So in other words, the net income from this fiscal year is going to be almost equivalent to the whole revenue of last year. That's how much the business has exploded in terms of revenue. Share dilution, since they mentioned they are going to be doing some share buybacks, let's just go ahead and put in 0.5% or actually 1% right now over the long term. We get to a fair value of close to $600. Oh my God, that's wild. That is absolutely crazy. That is crazy. If you go 2020, then we end up at, of course, 267. So you can see how wide that range is between 20 and 30%, right? We go from 267 to $600. That's a $400 range for Nvidia. If you go 25, then we end up at $409, which, would be a lot more reasonable for me. Like, I would be a lot more interested kind of going off of these expectations. But of course, 30% is also possible. Multiple is also 30%. So it's a little bit under $600. But you get the idea how crazy the valuations have now become for Nvidia, that it's got a wide range. So you can see that over here already. you can see that it ranges from $200, which is on the low end of that spectrum, 17% growth, 17 times P multiple, to $700, right? That's how wild it has become. 33% growth rate, 35 times P multiple. So that's where we would be. That's where we are with sensitivity grid wise for Nvidia based on their earnings growth and their earnings multiple. For me, like, I would prefer more on the 25-25 side, you know, because I feel like growth rate, the lower you can be, the better it's going to be. And of course, including a margin of safety of 10%. So low 400s is what I would be comfortable with for Nvidia. Going over the technicals here, again, 4-hour chart suggesting another very nice rally, $502, and it's up another 6% after hours. But of course, these right here, a level from August, literally August 11th, would be somewhere close to the fair value that we're talking about. So this right here is going to be that level, like close to low 400s. So let me know your thoughts down in the comment section below. You know, very, very nice move to the upside. Again, congratulations to everybody who's holding, trading Nvidia stock. Super excited for you guys. So let me know what your thoughts are in the comment section down below. What do you think about Nvidia? Are you buying, selling, or holding at these prices? Would love to know from you guys. As always, if you enjoyed it, found it helpful, make sure that you drop a like. And of course, subscribe to the channel. And link to our Discord Patreon is going to be down below. There is a 16% annual discount available till the end of this month. So we'd love to have you on board as our MoneyVest community member. And again, as always, happy investing. I'll see you all in the next video.